Imagine sending money across borders as quickly and cheaply as an email. That's the promise of XRP, a digital asset quietly transforming the world of traditional finance. While other cryptocurrencies focus on decentralization, XRP has been working with banks to solve the age-old problem of slow, expensive international payments. The current system relies on a chain of correspondent banks, each adding fees and delays. XRP offers a single, neutral bridge asset, enabling transfers in seconds instead of days. This approach challenges the foundation of banking, promising massive efficiency and cost savings. Many in the crypto world see working with banks as a betrayal, but XRP's creators believe mass adoption requires collaboration, not confrontation. Their strategy is pragmatic: integrate with existing systems, solve real problems, and build trust with institutions. Rather than a revolution, XRP is about strategic evolution, offering a better component for the global financial machine. You can't replace the system overnight, but you can upgrade it piece by piece. XRP's journey is about patience, regulatory navigation, and building trust with change-resistant institutions. The impact could be immense, a future where value moves as freely as information on the internet. This is not a get-rich-quick story, but a steady, transformative march. The quiet revolution is already underway. What happens when a fintech company like Ripple secures a banking license? It's a game changer for both crypto and traditional finance. A banking charter isn't just paperwork, it's a signal of trust and legitimacy. It allows Ripple to speak the same regulatory language as banks, breaking down barriers to adoption. With a license, Ripple can offer more services, holding deposits, custody for digital assets, and deeper integration with banking infrastructure. This makes XRP not just a speculative asset, but a functional tool within a compliant framework. Banks can partner with Ripple confidently, knowing regulatory risks are reduced. The shift from speculation to utility is crucial for XRP's maturation. It ties XRP's value to real-world economic activity, not just market hype. This bridge between old and new finance is built on compliance and trust. The result? A stronger, more seamless value proposition for institutions. XRP's role as a regulated useful asset becomes undeniable. Liquidity means being able to buy or sell an asset quickly without big price swings. For XRP to power large cross-border payments, deep liquidity is essential. Imagine a bank moving $50 million using XRP. Without enough liquidity, prices would spike and costs would soar. Institutional investors and market makers create the deep lake of liquidity needed for stability. Ripple's on-demand liquidity strategy is about building these deep pools for XRP worldwide. As more institutions use XRP, liquidity grows, slippage drops, and the network becomes more attractive. This creates a positive feedback loop: more use, more liquidity, lower costs. The goal is for even multi-million-dollar transactions to barely ripple the market. Building this trust and infrastructure is a slow, deliberate process, but it's the foundation for XRP to become a global settlement standard. Institutional liquidity is the key to unlocking XRP's full potential. Global finance runs on communication, and the old SWIFT system is showing its age. Enter ISO 2022, a new, richer messaging standard for payments, like upgrading from telegrams to high-definition video. It allows detailed data with every transaction, improving automation and compliance. By 2025, ISO 2022 will be the global standard for high-value payments. Any serious payment network must speak this new language. The XRP ledger was built with this future in mind, making it highly compatible with ISO 2022. While legacy banks struggle to upgrade, blockchain networks like XRP can integrate seamlessly. This gives XRP a strategic edge as banks modernize. The industry-wide upgrade opens the door for next-gen solutions like XRP. Timing and technology are aligning, positioning XRP for adoption. ISO 2022 is a quiet but powerful tailwind for XRP's journey. Myths about XRP abound, often blurring facts with fiction. One myth: XRP is centralized because of Ripple. In reality, the XRP ledger is decentralized, with validators worldwide. Ripple controls only a minority. Another myth: Ripple can dump XRP and crash the price. But XRP in escrow is released on a set schedule, transparently and predictably. Some say banks use Ripple's software but not XRP. While true for early products, on-demand liquidity is built around XRP as a bridge asset. The core innovation is instant settlement, only possible with XRP. People also confuse Ripple, the company, with XRP, the asset. They're separate. XRP would continue even if Ripple disappeared. Understanding these distinctions is crucial for informed debate. The XRP ledger's transparency and decentralization are often overlooked. Myths persist, but facts show a robust open network. XRP's value comes from its real-world utility, not just speculation. Clarity cuts through the noise. Bitcoin and XRP have fundamentally different philosophies, fueling tension between their communities. Bitcoin aims to replace the financial system, prioritizing decentralization and individual sovereignty. XRP's goal is evolutionary: improve banking by solving cross-border payment inefficiencies. Bitcoin is about revolution. XRP is about integration and collaboration. Bitcoin maximalists see XRP's regulatory approach as a compromise, but XRP's creators see it as a path to real-world adoption. The debate is about purpose, revolution, or reformation. Both have merits. Bitcoin as digital gold, XRP as digital oil for finance. They're not mutually exclusive, each serves different needs. The future will likely see both coexisting in a diverse digital economy. One doesn't have to win for the other to succeed. Complexity and choice define the new financial landscape. Technology's true test is real-world use, not theory. XRP's flagship use case is on-demand liquidity, enabling instant cross-border payments without pre-funded accounts. This frees up capital and streamlines global money movement. Beyond remittances, XRP can transform trade finance, automating payments, reducing fraud, and speeding up supply chains. The XRP ledger supports tokenization, allowing digital assets like stocks or real estate to be traded globally in seconds. This could create more liquid, accessible markets and break down international barriers. Success depends on building a robust ecosystem, banks, fintechs, and market makers all participating. Ripple supports this through initiatives like Ripple X, driving network effects. Adoption is a marathon, not a sprint. Utility must be proven daily. Each new application strengthens the network for everyone. Real-world impact is the ultimate goal. As of December 2025, the line between traditional finance and crypto is fading fast. Institutions are no longer asking if they'll adopt digital assets, but how and when. XRP's journey highlights the importance of regulatory clarity, partnerships, and solving real business problems. The future is a diverse ecosystem: Bitcoin as store of value, Ethereum for apps, XRP for payments. Interoperability, networks working together, is the next big challenge. For XRP, the focus is on deepening liquidity, expanding corridors, and integrating with global standards like ISO 2022. Regulatory licenses will further build trust and remove friction. Progress will be measured in steady growth, not headlines. The real revolution is in the infrastructure being built today. The financial system of tomorrow will be more open, efficient, and inclusive. The momentum is building, the future of finance is being written now.